Good morning, everyone. Welcome to our special Voracity training session. We're doing this for the second time because the last time we did it, our head trader, Vince Vora, was a little under the weather. Seems to be back to full strength now, so we'll get going on that shortly. My name is Raul Aurora. I'm the coaching and education coordinator here at Trading Winds. If you're joining us for the first time, welcome. Thank you so much for making the time to join us. My job really is to direct traffic, make sure you get the most out of the session, and you leave here with something valuable in terms of trading knowledge. That is our goal. The way we do that is by making sure that you can hear us and see us correctly. If you can, please let us know by putting in some kind of affirmative note in your chat box, and we will get going shortly. Lots of familiar names. I see Randy from Waterloo, Iowa. Fourth one in today. Randy, nice to see you. I see Mary, Melanie. Melanie's that I cannot see the city name, so I'm going to assume that's our good friend Melanie from Texas. David from Indiana. I do see Rob, Mary, Kathy, Paul. Lots of familiar names. Lots of names that, and it is Melanie. Nice to see everyone. I see Karen. I think that's our friend Karen from New Smyrna Beach. Nice to see all of you. Good morning to you, Vince. How are you?
I'm doing well, better than last time. Still, this cough still lingers a little, but I am doing much better than last time. Thank you.
Good to hear. Good to hear. Before we get into the training for today, it's just about 2 minutes past 7 on the West Coast, 2 minutes past 10 on the East. Let's take a quick look at the market before we get into the training.
Well, the markets are off to a good start today. The Dow's up 122 points. Nasdaq's up 40, S&P's up 14. The 10-year yield, the yield on the 10-year bond is down to 2.883. So that's giving the equity market a bit of a breather this morning. That's a good thing. Excuse me. If that continues, we should expect equities to continue moving higher. But today's close will be very important with the overall picture here. And we can look at some of the charts in a moment for the Dow, the S&P, etc. And I can explain it a little further. But today's close is going to be very important.
All right. Fridays generally are a slower day in the markets. What's your typical schedule on a Friday when you're looking at trades? Are you looking to open new positions, or are you looking to close out positions that you've opened during the week?
You know, usually I'm looking to close out more than open on Fridays, but lately I don't know. I've seen a lot more opportunity there, so I'm not going to hold back. I mean, this week I am. This week I'm not opening anything up until I see where the markets close, and relook at some of those weekly charts over the weekend. But generally Fridays is payday, payday for me. I like to bank some profits and look forward to a new week. But more and more, I'm seeing some pretty good opportunities on Fridays.
FANG stocks always get a lot of attention in the media. Is there anything that you see amongst Amazon, Netflix, Google, etc., that would be interesting for a look next week?
Well, Amazon is retesting those all-time highs once again. So, there's that opportunity of, or the potential of a double top being put in, or if we can trade above there, then we're off to new highs, no resistance up ahead, and we should get another nice move higher. So Amazon, I think, is going to be an opportunity one way or the other, and we should continue to watch that. We can have a look at it once we open up our charting platform here.
All right, we did promise the folks that we'd try to give them 2 to 3 trades to look at for next week, so hopefully we'll get a chance to do that. Voracity, tell me a little bit more about that.
So Voracity came together for me about 20 years ago, and it's an interesting story. I was always, like everyone else, in search of the Holy Grail, right? And came up with a combination of indicators that seemed to work extremely well. And so the system itself came together in about a couple of weeks. But what I've spent the better part of 20 years doing here is trying to come up with a balance between reducing risk and getting it to as low as possible without capping the upside. That's always a problem in the markets. Risk and reward kind of go hand in hand. The more risk you're willing to take, the bigger the reward can potentially be. I wanted to sort of separate that and reduce the risk without reducing the potential reward. And after all these years tweaking it and trading it, I finally have come up with something that works pretty well. And the difference between Voracity and any other system that we have developed here is that this one pretty much captures every big move. That's what it was designed to do, was not miss the big move. So if you're interested in capturing big moves, I think you're going to like what you see. But it has been extremely consistent for me, and I'm happy to share it with you.
All right, Vince, with that being said, just change your screen for us just quickly so that we can see what's going on. Make sure that we can all see your screen. If you can change over to a chart or your first slide.
Oh, sure. You should see now the Tactical Trader platform.
Correct, we do see. All right. Vince Vora, quick introduction, has been trading for over 30 years. During that time, he's been working on systems that are based on technical analysis, specifically price action. He's going to tell you a little bit more about that. Over the last 10 years or so, his focus has been on educating retail traders as well as institutional traders. Here he is, Vince Vora with Voracity.
Excellent. Thanks again, Ro, and welcome everybody. Glad to be with you. And for those of you like Karen who have struggled with the flu like I did, my thoughts are with you because it was a nasty one and it doesn't seem to want to go away. But glad you're all here, and I'm really glad to be sharing Voracity with you, and especially on Tactical Trader. Tactical Trader, as you're going to see in a moment, is a very unique platform, a little different than most charting platforms, and it has a couple of very unique tools that go hand in hand with Voracity. So let's get started. As Raul said, I am Vince Vora. I'm the head trader here at Trading Winds, and I have been doing this for over 30 years. It's been a crazy ride, but over that time have developed several strategies, and Voracity is really my baby, the one I'm most proud of. Please do remember that trading can be risky, so please don't trade with real money until you're completely comfortable with the system you are using. Now, what I want to do today is I do want to share my money management rules with you at the beginning. I'm only going to take 3-4 minutes. I'm going to go through it fairly quickly, but these are important no matter what strategy you use, whether it's one of mine or your own. It doesn't matter. Money management, a solid money management plan will really make all the difference between you being consistently profitable or a consistently losing trader. It really does come down to the money management plan. So I'll share that with you. We'll talk a bit about the components in Voracity, how it works and why it works, but more importantly, how this can work for you as well. And hopefully we'll have time to answer all your questions today. So let's get started with the money management rules. There's only a handful of them. The first one you'll probably laugh at, but it's not a laughing matter. It is very, very serious. When you sit down to trade, you really should have a clear mind and a positive mind. And if it's a day when you're feeling a little off, like, when you're battling the flu, for example, when you're not feeling quite well or can't concentrate completely, that's when you make mistakes. And so it's always best to turn the laptop off and go rest or go do something else until you feel well. You really do need to be focused and have a positive mindset when you're doing this. Also, trading is so much more about how you manage a trade once you're in it than it is about selecting an entry. Okay, so even though Voracity, for example, will pick an entry for you and give you an exit, for you to remain in that trade and manage it properly through the life of that trade, you won't be able to do it if you're worried about the amount of money you have in it. So the one thing I always tell people is to trade with an amount that feels completely insignificant to you. If I said to you, put $5 in this trade, are you really going to worry much? You're going to be able to think clearly and manage it. If I said, put 500,000 in this trade, it'd be a little different for you to manage. So that's what it comes down to. And the amount of money doesn't matter. What matters is that it feels insignificant to you. And then as you grow your account, that amount grows, but it'll still feel insignificant to you, and you'll still have a sizable trade on, but you'll be able to manage it appropriately, and that's the key. Now, one of the other ways that we manage risk here is to make sure we never put more than 5% of our account balance in any one trade. And the goal here is to actually reduce that percentage. So as you grow your account, you should bring that down to 4, to 3, to 2. If you can get it down to 1% of your overall account balance and still have a decent amount of money in that trade, that is the best scenario. You will be able to manage it appropriately because it will feel completely insignificant. And whether the trade completely blows up on you or not, the most you can ever lose is 1% of your account. So that is the key here. Grow your account and reduce the amount you put into every trade. Now, there are things that are completely out of our control, and every once in a while, there's some unexpected event. I hate to keep bringing this up, but like 9/11, for example, no one expected it. No one could have protected themselves from it. The only way that we can manage an event like that is to always make sure that we keep half of our account in reserve. In other words, in cash. And so while you may think that, well, that money's sitting there and it's not earning anything, that's our safety blanket. And that's what, no matter what happens in the market, if such an event like that were to happen again, and we were to take a hit, first of all, it wouldn't be a big hit if you're following the previous rule. And secondly, you will have more than enough money to put back into the market and recoup whatever losses you took, okay? And with Voracity, it really won't take you very long to recoup that. Now, another rule that you definitely want to follow is to spread out your trades. What you're going to see in a moment when I bring up the Voracity charts is that there are plenty of setups to choose from. In fact, there are so many you're going to need to whittle it down to 1 or 2 trades for you to find. And what you want to do is select the 1 or 2 highest probability trade setups, regardless of the time frame that you are trading. Okay, we've seen, especially lately, especially in the last couple of weeks, we've seen some big moves in the market. And there are days where the Dow drops 1,000 points, then bounces 500, etc. So when you have a strong day like that, you are going to get a number of setups in that direction. So if the market drops 1,000 points, suddenly there's going to be a lot of short setups. If you go out and you short 7, 8, 9 stocks at a time, and the very next day the market bounces 1,000, you're going to find yourself in a huge hole. And that's exactly what you want to avoid. You want to spread your trades out, select the 1 or 2 highest probability trade setups, and I'll show you how to do that. Okay? A couple of golden rules here before we move on. Number 1, you'll never go broke taking profits. And this is geared more towards those of you who are just starting out, because one of the biggest challenges for a trader is learning how to remain in a trade for the life of that order, like I mentioned earlier. So since we are going to be taking a very small amount of risk, you can be profitable by taking small profits as well. So at the beginning, when you have a profit, bank it. And the reason why you want to do that is twofold. Number 1, you do want to grow your account, because as you grow your account, you're going to become more and more confident, and you're going to have the capital available to give yourself a little more leeway, right? But also what that does is build your confidence, not just in yourself as a trader, but in the system that you're using. So it really is key. And then as you gain experience, you'll be able to stay in a trade a little longer each time. All right. Now, if there's one thing you take away from this webinar today, it's this. You need to understand that you cannot control the market, and if your goal is to become the world's greatest stock picker, you're in this for the wrong reasons, and you will most likely not be successful. Okay, you have to understand that this is not about you. It's not about whether you're right or wrong, but it is all about how much money you make when you're right versus how much money you lose when you're wrong. In other words, it's about execution. It's about how you place those orders, how you manage those orders. Okay, not about whether you were right about the direction of the stock or not. But if you focus on following the rules and managing the orders properly, it'll pay off in spades. Okay, so let's talk a bit about Voracity and the components of the system. There are a number of indicators and oscillators that, when combined, will either trigger a setup or not, or so it'll tell you whether to stay in a trade, get out of the trade, etc. But it's the combination of these that will minimize your risk while keeping your potential gains unlimited. Now, I'm comfortable with this. I know it because not only did I create it, but I've been back testing it and forward testing it, meaning trading with it for many, many years. You will have to try it yourself and gain some confidence in it. But I know how well this works, and hopefully by the end of this, I'll be able to show you how well it can work for you. So what this will do, as I mentioned earlier, is it's designed to catch the big moves. Okay, so it keeps your losses small while keeping your gains unlimited. So it maximizes the safety component in each trade. So you don't have to be an aggressive trader. You can be a very conservative trader like myself. I hate risk. I completely hate risk. And whether you are a day trader, a swing trader, a long-term investor, it really doesn't matter. This works on any time frame and any market. Okay, I'll show you examples of all of those as we go through this. So what can it do for you? Excuse me. Well, it will help you identify some pretty great trade opportunities. Again, whether it's a short term, a medium term, or a long term trade, it's really going to help you find some pretty massive trades. Now, if any of you are managing a retirement account, a 401k or so on, you're going to love this because, as I mentioned, this identifies the big moves. And when I show you the monthly charts on this, and you think about, managing a portfolio of dividend-paying stocks you can also write calls against to bring in more premium, etc. And when you see the signals that Voracity will give you on the monthly chart, I think you'll be impressed. There's one other thing that you can use this for, and that is to predict the major market moves. It will call the major swings from bear to bull and vice versa. Okay, so let me bring up the platform and show you what Voracity on Tactical Trader can do. Now, here, what you're seeing is the Tactical Trader platform. And first, I'm going to go through a few of the smaller tools on here. And then I'll talk about Voracity, and then I'll talk about some other unique tools that are on this platform that you can use with Voracity. Let me just grab a sip of my water here. Okay, so this is a great charting platform, and it has all the usual tools. If you look on the left here, it has all your, your trend lines, and your pitchfork, your Gann tools, your Fibonacci tools, you name it. All your drawing tools. You can annotate your charts in any way. If you're an Elliott wave follower, it has all of those. So it has all the usual drawing tools and so on that you can use on your charts. You can compare one symbol to another. You can create different layouts and save your templates and have multiple templates on here. you can customize your charts any way that you want. There is a chart properties button up at the top left here that will bring up this box. So you can change the background, the candles. You can use, Heikin-Ashi candles, line charts, you name it, all the usual. You can also get to that by right-clicking anywhere on the charts and going to properties, and that'll get you there as well. So you have all the usuals here. You have your watch list. You can create multiple watch lists. You can now, this is a feature they just added, is import or export a watch list. Another great feature. You can edit them, everything, and it's very, very quick and easy and simple to use. You can add symbols on the fly here. As you'll notice, there's a little X. You can delete them just by clicking that X. So you can also get rid of your watch list by clicking the show hide button here at the top right and increasing the real estate on your chart. You can add alerts here. If a symbol crosses a certain price, etc., and you'll get an alert. So it has many, many tools. The best I'm going to save for last, though, here with the seasonality, earnings, etc. And I want to focus on trading, on using Voracity. James, yes, there's a great scanner, actually, and I'm going to show you. We're actually going to run a scan here in a moment. And not only is there a scanner, but there's a scanner for each of the tools. Very, very helpful. First, before I go any further, one thing I do want to tell you is one of the easiest things to do to help you become a successful trader is to focus on charts that are very clean and have a strong trend in one direction or another. Look at Boeing here. Boeing, this is a daily chart, and it's just pretty much been a slow, steady climb higher. Now, lately, we've seen a lot more volatility here, like we have across the board. But when you're trading a chart like this, it's so much more predictable and easy to handle. And your likelihood of getting stopped out on a chart like this is very, very small. Okay, let's look at another example. MAR, another nice, strong, clean chart, right? You see that the candles are made up of mostly bodies, very few wicks and tails, right? And all pretty much being the same size as well. So very predictable, very clean. Now let's look at something like Tesla. Not so clean, right? Look at the bars, all different sizes here, long wicks, long tails. Your chances of getting stopped out on a stock like this are extremely high. So why make it difficult on yourself? Make trading easier on yourself, right? BMRN, just a mess, right? You want to stick to nice, clean charts. That is the key. Now, remember earlier, I said you can use this to judge the major turns from bear to bull market, etc. Well, let's go to a chart of the SPYs here. We're going to go to the monthly time frame, and I'm going to bring on the Voracity template, the signals here. Now, let me explain first of all what you're looking at. These little green circles and red circles here, these are the signals. Now, if you hover over them, it'll tell you what it is. It depends on the size of the screen that you're working on and whether or not you can see it clearly. Let me try to zoom in here so you can see this set a little clear. But for example, if it's green, that means it's a long trade, okay? Now, if it's an arrow that's slanted to the side, that's your long setup. That means that it's giving you a heads up that there may be a trade coming, but you're not ready to take a trade quite yet, okay? If that's followed by an arrow that's pointing straight up that says long enter, now we need to get long, okay? That's your signal, that's your trigger to go long. And as you can see right now, since April of 2016, it's told us to stay long the SPYs, and this is what's happened. A beautiful move higher, right? Nothing wrong with that. Now, when it's time to exit the trade, it'll give you an arrow downward, which says exit. This was the exit from the previous trade setup. Now, if you can see here, there was a setup to go long. Here's the setup. Here's the trigger. When it went against us, it got us out immediately and then got us back in, and we've been in ever since, right? So when you're seeing the red signals here, it's the same thing, except they relate to a short trade, right? Short, excuse me, short setup, short enter, and then exit. All right, so on a monthly chart, you can actually use these as your long-term market view. So if you use something like the SPYs, a major index, the SPY is the S&P 500. You can see that back in October, November here of 2011, late or early 2012, it gave us a signal to go long. And that lasted all the way up until, August, September of 2015. And then it got us back in here for the next run. So when you see this, now you know the long-term view of the market. And you can revert back to whatever time frame you prefer to trade and start looking for trades in that direction on individual stocks or on the index itself. So whether you want to trade the SPYs or the Qs for the NASDAQ, for example, the diamonds for the Dow, that sort of thing. But it does a really, really good job of capturing the big moves. That's what it's designed for, okay? Now, I do want to say that you're going to see many, many of these circles here, these signals. Your goal is not to take every single one, okay? There are setups that you want to take and others that you want to avoid. I'm going to talk a little more about how you select which trade you take versus which ones you don't near the end of the presentation. But even if you were to take each one, you'd still do well because when you capture these long trades, these big moves, it really more than makes up for any losses. But what I'm going to do is help you, help you avoid many of the trades that don't work out well and only focus on the ones that do. Okay, so we can, as I mentioned earlier, if you're managing a retirement account or a long-term account, and especially if you're holding dividend stocks, okay, this works extremely well, no matter what stock you're trading. Let's look at Apple, for example. Look at that, big moves here that it's capturing, huge moves, right? I mean, we're talking about from here going from around the $25 level, in around a high of 90 here. And that time we got out in the 70s. Here, another move from about 83 to a high of 128. Recently, from about 120, and the stock is currently at 173. Huge moves, right? And you can look at anything, any Dow component. Feel free to throw out Cymbals. I'm happy to look at them. Here's Home Depot, going from 30 to 130 here, and then getting us right back in near 135, and here we are sitting above 200. So, and how easy is it to manage that trade? Very simple, but that's what it's designed for. So as you can see back in here, multiple symbols, right? Setups. You would not have taken these trades. There are very specific rules why we would not have taken these green symbols here. Okay, but even if you did and it went wrong, it would get you out immediately. So your losses are much smaller than your wins. So the goal here is to have way more winners than losers, but also to have much bigger winners than losers. With that kind of math, you really can't go wrong, right? That's the key here. And that's what took so long for me to perfect is how can I program this? How can I combine the different indicators and oscillators to identify very quickly when things go wrong and get me out, but still keep me in when things are going my way, right? For the big moves. And that's what took so long, but finally it came together. Have a look at a few others here on the monthly chart, and then we'll go to smaller time frames. Here's NVIDIA, right? Some big moves here recently. And whether you're looking at the weekly, the monthly, look at that. Huge moves, right? It does a real good job of keeping you in for the long haul. That's what it's designed to do, right? Let's look at something like 3M. And let's see. A few of you are throwing out Cymbals. So let's have a look. Verizon. Who is asking for that? Let's see. BBC. Not sure what the name is, but let me see. Let's look at VZ here. So, and here's the thing. Let's start with the month here. We're going to go down. So this is great. You mentioned this is a choppy stock. So have a look on the monthly. First of all, it is a bit of a choppy stock, but there were all these false signals in here that we would not have taken. Any of these, I can tell you right off the bat. Here, beautiful, long pick. Now, recently it went long again, and this one we would have taken. It's pulled back a little right now, but we're still in the trade, and it's still good. Let's have a look at the lower time frames. And this is key. You don't have to take every setup. So when you see something like this, if I were to bring up this chart now and look for a trade here, what's your first impression? Is this a clean chart or is this a messy chart? And what are my chances of getting stopped out versus being in a trade for a while? This is messy. So why would I trade this? I wouldn't, right? The other thing you can do, since you have the benefit of seeing the old trade signals, you can look back and say, hey, how well did these signals work out? Well, if it's on a chart like this where you could say, well, it doesn't seem like it worked very well. So why would I now jump in on the next one? I wouldn't, right? So you can be very selective because there are a ton of trade setups. So again, you look at the daily chart, it's not a very clean chart, is it? So I wouldn't stick to it. Now, BBC is saying that Verizon is a dividend paying stock. It may well be, and maybe it's worth it to hold based on that dividend. But maybe also there's other dividend paying stocks that are much cleaner than this, right? And we'll give you a much more, a much easier time to manage the order, and a much bigger profit in the long run. So don't get married to one stock. Have a look at the history of it and the performance. So a few of you are throwing out other symbols like Micron. John is asking for Micron. So we look at Micron on a daily. Doesn't look too good right now, does it? We can look back and say, hey, have a look at this. Let me just refresh this. Oh, there it goes. Let me just refresh this. There. So let me zoom back here. Go to MU again. There we go. So have a look at MU back in here. Captured it beautifully, right? Beautifully. So it depends. If I was here, if it was at this time, I'm looking at this, I'm saying that's a really ugly chart, right? Maybe I wouldn't do it. Okay. Now, is there a reason to take this symbol or not? There is. I'll give you one of them right now. You're clearing the highs, right? So we went through a really ugly, choppy period here, and now we're coming out of it. So if you're coming out of a channel, that is a great setup to take. And look what happened next. It just took off. Why? You're getting past all the overhead resistance. That's why stocks making new 52-week highs or all-time highs are extremely important, okay? And that's what you want to focus on. When they once again go in a channel, you want to wait for signs of a breakout. You don't want to take the chop in the channels, right? Now let's look at, weekly. Look at that on the weekly MU. Beautiful. How about monthly? Does MU pay a dividend? Maybe it does. Maybe it doesn't. I don't know. But see, when it gets past the chop, when it clears all overhead resistance, look at that. How clean is that, right? And we went, you know, back in here, we were from, what was it, the $17 range up to a high of about 36 or so, a double, more than that. Like, you know, some fantastic trades. Let's go a couple more symbols quickly, and I want to show you a few other things. Karen is asking for Walmart. Let's look at Walmart. Now, Walmart had a huge gap recently, right? Not very good, but there were some pretty nice trades here earlier. This is the monthly. Let's go back. Let's try the daily here recently. And there we go. So here, have a look recently on Walmart. We went from the 85 range up in here to almost 100, 98 or so, right? Nice $13 move. Beautiful. Then we went again from 99. It got us out here, where was it? Near the 104 or so. Recently got a short right here after that huge gap on after earnings. The market really punished Walmart there. But you can go back. Let's go back through and look. Are there big moves here? You know, that's what you can do. You have the benefit of that, right? You can also look at the lower time frames. Now, I don't know how this is going to trade on a 5-minute chart, right? On a 1-minute chart. Maybe it's a mess. Maybe it looks great. Look at the 1 minute, right? So your goal here is to find the time frame that you like to trade or your overall strategy. You know, are you saving for retirement, or are you just want to be a day trader in and out quickly? Because it really depends on your lifestyle. You know, if you're someone who has a full-time job, a family, you can't sit in front of the screen for 8 hours a day. But, you know, maybe there's a break of a couple of hours that you can trade during the day, or even at night with Forex, for example. Then you want to look at a time frame that suits your schedule, right? And that's where the scanners come in, right? The scanners are great. And I'm going to show you those in a second because I'm really starting to run out of time here. Let me show you a few other stocks, okay? And I'm happy to take more symbols if you want. So ODFL is not for day trading, but have a look at the daily time frame here on Old Dominion Freight. And this is a stock I've been looking at recently, and look at these moves. Nice and clean. Why do they work so well? Okay. Because, first of all, you're at an all-time high here. No resistance up ahead. Okay. If you look at the price action, you look at the candles, very orderly, very few wicks and tails. It's just a nice, slow trending stock. And then the symbols, the Voracity does a great job of calling those big moves. So remember, there are many different ways to trade this. For example, if this is calling a move here, an entry here, you have the benefit of looking back and seeing the history on this. Now, you also have the benefit of judging whether this is a messy chart, a clean chart, where there's overhead resistance, all those things. You can use Fibonacci tools to judge your entry. There are many things, and we teach all those as well. But here, the benefit is that you know when you enter this trade that if it's going to go wrong on you, it's going to tell you right away, and it's going to get you out. The other thing is that you know that it's designed to catch those big moves. So you're comfortable in sticking with it because you know it does a very good job of keeping you in for the bulk of that trade. Now, there's nothing stopping you from scaling out along the way. So if you see and capture a big move like this, you know, you don't have to stay in all the way to the end because there's always that chance that you'll get a gap against you or something like that that will eat away a part of your profits, right? Now, in the long run, I can tell you it is worth it to stick in it and wait for these exit symbols. But you can scale out along the way. You can sell calls against it along the way. You know, you can buy straight calls. You can sell a put credit spread here. Many different ways of doing it. So if you're an options trader, you know that not only do options limit your risk even further, but they can also help you leverage a trade. And that's why they work really, really well with this. Okay. Let's see. One more I'll take. Starbucks. Someone's asking for Starbucks. Starbucks been, was a stock that was really trending well for a while, and now recently, became very, very choppy here. So, there were times in the past where it worked out really well. Recently, it's been very choppy, very ugly. So I wouldn't trade it here. Let's look at the weekly. See, look at that. Whether we take off the symbols or not, look at that chart, right? Very choppy, very ugly. So why do that? And you look at the monthly. Here's that time before where it was really on a tear, and then here from 2015, from late 2015 until now, it's just been in the chop zone. So the monthly time frame does a really good job of showing you, whether you have a clean chart or whether you're in a chop zone. And if we put those signals back, right here, there you go. There's your long entry from the $15 area, 15.16, all the way up in here, when it was in the mid 50s, right? Huge. Nike's another one, right? Someone's asking for Nike. There, look at that. Big move here. There's one here where if you had taken it, first of all, you wouldn't have this one. And again, I'll explain why later. But if you did, it would have gotten you out quickly, gotten you back in for another huge move. Okay? So, Voracity, whether you're dealing on a 1 minute, a 5 minute, daily, weekly, monthly, it works extremely well across the board. You can use stocks, you can use currencies. Here's USDCAD. Okay, that's a 1 minute. I don't know why we got to there. Let's look at the daily. There's been some bigger moves recently. Let's look at the weekly. But any currency, any futures contract, forex, stocks, cryptocurrencies, you can look at those as well. They're all here. Okay. Now, how can we actually enhance our chances of success with this? Okay. And here's one of the ways. And this is where Tactical Trader comes in, because they have a couple of very unique tools here. First of all, I before I forget, I don't want to go by. I want to say that there's a nice scanner here. So here's the scanner. If you go to the right panel, you'll see that there's Voracity right here, the little blue line. If you click on that, it brings up this box. Okay. Now you can specify a minimum price or a maximum price. You can select your group of stocks to search. Okay. And whether it's the S&P 500, the Russell 1000, 2000, NASDAQ, the Dow, you can click all US stocks, main forex pairs, cryptocurrencies, you name it. I'm going to leave it at the NASDAQ 100. Okay. And you can also select your time frame. Okay. We'll leave monthly for now. Right. And we'll scan. Look how quickly it went through that. Did you see that? I mean, it's literally seconds. And now once it brings this up, you can sort by symbol, by price, or by the signal, group them, right? There's a potential buy. Here are the exits. These ones are currently in a long. It's got them all for you. And you see as I follow through, there's this little star. If I click on that, it'll automatically add it to my watch list. So I can quickly go through these. If I click one here, like Orly, it'll bring up the chart. And there's that signal. Look at Orly here. Long entry from the $40 range. Exited up here, in about the $270 range. I mean, want to move from 40 to 270, right? Incredible. But you can quickly scan for whatever time frame you're looking for, and you immediately know from this column whether you're in a long setup, whether it's a buy, a short sell, an exit, you name it. Okay, it's all right there, extremely quick. Now, how do we increase our chances of success even more? Well, that's where the seasonality tool comes in. So if you look over here, On the right, there's a seasonality tool. Now, I'm going to run a scan for seasonality. And the parameters I like to use are I want a minimum of 80% chance of a move in that particular month. I want a minimum on average of a 2% move. And I'm selecting the month of March here. And I'm going back to start searching back from the year 1990 forward. I'm going to use the NASDAQ 100 again. But again, you can use any index you want, and you can change these parameters to your liking. I'm going to scan. Here it is. It's giving me a list. Now, when I click on one of these, let's use AVGO. Here we go. Now, this has a simple view, which is what you're viewing here. It also has an advanced view. For those of you who really like some data, you can dig into that. But here's what it means. Here's the month of March here, the third bar from the left. What it means here is that 88% of the time, since you can see the actual data here. So this is using data from 2009 to 2018. So since 2009, every March here, on average during the month of March, 88% of the time, it was up an average of 5% during the month of March. So now that we're in late February, what we're looking for is an entry signal to get long on AVGO as we head into that month. Why? Because there's an 88% chance that we're going to see an increase on average of about 5% during the month of March. Okay, now you could search for 100%, for 95%, whatever your parameters are. Let's look at a few others. Let's look at Qualcomm. Qualcomm's been around a long time, since 1991 until now. Look at the month of March. 85% of the time since 1991, it's gone up on average 9% during the month of March. Why? Who cares why? We don't need to ask why. What we know is that we have an 85% chance of seeing a pretty sizable gain in the month of March. So then we can switch to our chart to Voracity, in the previous month and start looking for trades. So we can do this. We have the data for all the months. So what you want to do is start ahead of time and run these scans and make a note of these and say, hey, in February, I'm going to start looking for a setup on Qualcomm here to head into March, right? Let's look at another one, Charter. Look at that, 88% of the time, an average increase of 8.3%. Netflix, right? 80% of the time, an increase of 5.1%. You name it. And there are the 100%, many of them, okay? You can also look at other months. I think McDonald's has a big move, but later in the year, I believe. Yeah, there it is. During November, 93% of the time, up 4.3% on average. That's going back to 1990. That's very statistically significant, right? Talk about an edge. So now, not only do you have that edge, knowing that almost always during the month of November, McDonald's goes up, but now you also have the power of Voracity behind it. And you can wait and let Voracity tell you when to get in. Okay? So the two combined, that's where the magic happens, right? Now, there's also a tool for earnings. If you're an earnings trader, you can scan for earnings here. You can also just go here and bring up earnings and enter a symbol. What this does is it gives you an idea, looking back, of how a stock performs right after earnings. The 1 day, 3 days, 5 days, 7 days, right? So you can look back over several quarters, over many quarters. This one's going from 2013 to 2017 and telling you how it performs, right? So you can plan to look for those setups heading into that or right after earnings, right? So, and you can search by quarter, right? let's look at Netflix, for example. Netflix usually does well in Q1, right? Look at that. So 2.89% usually one day, 24.1% after 3 days, right? So it gives you an idea of the power behind the moves. And this is going back to 2013. So you can use these stats and plan ahead. And then you have the added benefit of having Voracity not only tell you when to get in, but telling you how long to hold, right? So it makes trading so much easier, so much easier. I really like the way they've put this together. And the charting platform itself is really robust. But with these tools and these scanners over here, it's fantastic. You have the alerts. Again, you can import your watch list. You can edit them. It really, really works well. So all of this comes together as a package. And now, in addition to that, of course, we want to teach you how to select one trade over another. Okay. Now, what we've done is we've put together a couple of great packages for you. If you go to tradingwins.com/win, WIN, it'll take you to this page, and there's two packages. There's the platinum package on the left, which includes the full Voracity indicator, all the signals, with the full suite of tactical trader and those pro tools, the seasonality, the earnings, you name it, the full package with real-time data that's always on. Okay, always real-time data, and again, for everything, whether stocks, forex, futures, your cryptocurrencies, you name it. Okay, you're going to get an on-demand training here. You get a recording of the training class that we did last time on this that explains which trade you should take versus one you shouldn't. Okay, and this platform will work on a laptop, a desktop, a tablet. Okay, you can access it from anywhere with an internet connection. Okay, because it is browser based. It's not a software that you load. It's browser based. You can access it from anywhere. On the right, what we call a day trader package. Here, you get everything that you get in the platinum package and more. So you get the full Voracity, the full tactical trader with all those tools. You get the real-time data. You get the on-demand recording, but you're also going to be able to join us live for another live training next Thursday at 1 p.m. Eastern. So it's March 1st, next Thursday, March 1st, 1 p.m. Eastern. You get a live training. I'll teach you exactly which one you should take versus which one you shouldn't. And we're going to throw in a bonus. You get 3 months of our Trading Wins Pro subscription, which for those of you who may not be familiar with it, you get nightly videos from myself every Sunday to Thursday, so 5 times a week, explaining what the market did, where I think things are going. That's where I share some trade ideas as well. You'll get to join us live twice a week for our live market chats, where you can come into our room, ask me any trading related question you like. And we have some of our members here, I believe, who can comment on those sessions. They're all recorded and put into your own video library. And also, as a pro member, every month we do what we call our course of the month for our pro members at no extra charge. So over those 3 months, you'll get another three courses at no extra charge. So you'll get everything in the one package. Okay, again, it's tradingwins.com/win. And I can see that there's a ton of questions. So I'm going to ask Raul to come back in and help me read off a few. We'll try to get through as many as we can. Raul?
All right, Vince. Great presentation. Yes, a lot of questions. Most popular question, does this work on a flip phone? No, unfortunately not. It does not work on a flip phone. I'm kidding. I'm kidding. The reason I say that is because most of these softwares that we've dealt with in the past, you've got to load them onto your computer. You usually can't use them on a tablet. And this is actually pretty slick. You and I have been using it for the last, 3, 4, 6 months or so approximately. And it's been pretty good, has it not?
Oh, it has. And And one of the things think you'll be most impressed is the response time. It's lightning fast. I mean, you saw a brief example on the scanner of how quick it is, but when you compare it to the other tools out there, it's extremely fast.
Okay. Can we day trade using 1, 5, and 15-minute charts? That is from, we've already answered that question online,
yeah,
but
absolutely.
yes, go ahead.
Absolutely, you can. Yes, you can, and you can scan on those time frames as well. So you can look for new setups on each of those time frames. So all that's available.
All right. Are these yearly packages? That's from Edward. Edward, yes, they are. You'll get the details there in the chat box as well. Calix is asking, what's the Renko tool? We can talk more about that in a bit. Vince, from David, do the signals appear at the close of the candle? Is that correct?
The signals appear, yes. So within that same candle, while that candle is live, let's say it's a 5-minute candle, throughout that 5 minutes, that candle can fluctuate. And so if it triggers a signal and then drops back, that signal may disappear. But at the close of that candle, the signal will appear and it will remain there forever. So once that candle closes, whatever signal there is will stay there permanently. So when you look back, you're looking at at accurate accurate calls. So that's how it works.
All right. There was a question regarding when you had mentioned that you don't need to, it depends on the kind of trader you are, you don't need to be at your screen all the time. Tactical Trader apparently is coming out within the next day or two with a system or with a trade alert service as well that'll alert you when the system that you're using triggers an alert.
Yeah, and I mean, it's going to be a huge help. The one thing I can tell you is they're constantly working on upgrades. The platform is great as it is, but you're going to see a lot of other enhancements coming down. And like Raul said, in the next couple of days, you'll be able to have that feature as well to give you a heads up of when those signals appear. Absolutely. Just using your watch list. So you can complete your watch list and it'll tell you which one of your stocks is triggering.
All right. One of our friends, Win, one of our regular contributors is on. I'm going to read a comment from him in just a little bit. But I wanted to ask you regarding futures. ETFs are a pretty close kind of a mirror image of futures. Have you had any difficulties with the fact that we don't have futures here and you're using only ETFs?
No, not at all. So, if you look at a chart of the of SPY, SPY compared to, /ES, which is the symbol for the futures contract of this, they're identical. You can use the diamonds, as we call them, DIA in place of the Dow Jones. You can use QQQ in place of NASDAQ. All of that. You can do the same for gold. Use GLD. The same for oil. USO. There are so many ETFs out there these days. And there's also the ultra shorts, as you know. So if you only, if you prefer to only trade to the long side, for example, you can bet on something dropping with an ultra short ETF. What that means is if that market falls, the ETF actually goes higher, right? So you can trade to the long side, even to short something. And so there's so many ETFs out there these days that that's really all you need.
Somebody else was asking, are there any ongoing data fees for the day trader package? No ongoing data fees. You do get live data. Once you pay, you're all set for the year. The right. Tactical Trader folks just sent me a message saying that they're called strategy-based alerts, which is what you'll be getting with the Voracity system. So an email will be sent out to you saying you've got a trigger on, I don't know, Cisco, Google, AT&T, whatever it is that you're trading. I think that'll be a real game changer, Vince.
Yeah, absolutely. It's a real convenience for sure.
one of the other folks was asking, Brian says, tactical trader has a monthly fee. No, that is included. So that pro platform, which includes the seasonality as well as the earnings scanner, is included as well. Incidentally, Vince, I wanted to point out to you, read a trade that one of the folks that had bought this platform recently had put on. It was a Netflix trade at earnings, and it was a debit spread. Let me just get the details on it here. Just go back for a moment. 210, 230 debit spread for $7 that sold 20 after earnings. So spent $700 on one contract and sold it for approximately $1,900 or so. So made about $1,200 on just that one contract on Netflix.
Right, and those tools I was showing you earlier, the seasonality and so on, or the earnings, that's where they really come in handy, because you can look back many, many years and see what the likelihood of that move repeating itself is. And then you also have the benefit of the Voracity signals to help you pinpoint exactly when to get in and when to get out. So it's they work really, really well together.
All right, Win, our friend from Florida, says, I've subscribed to several advisors and experts over the years. Vince Vora is amongst the best that I've encountered. He's knowledgeable, patient, and goes out of his way to answer all of your questions in language that you can understand. Furthermore, I found that he and Raul are gentlemen to the core. No fakes here. Well, thank you very much, Win.
Yes, thank you, Win. Appreciate it.
The kind words. Always a pleasure to have you on with us. Difference between both of the packages is only the live session. No, Xavier, the difference is you get the live session as well as you get 3 months of the pro service from Trading Winds as well.
Yeah, and so that pro service is normally $97 a month. So you're saving that as well.
All right, Vince, we're just at the top of the hour. Let me get a couple of other symbols in, if you can.
Sure. Let me
what are you looking at? One of our folks, I think Jane had asked just before she left, what's on your watch list these days?
Well, I'm looking at the main indices, because I'm trying to really determine whether or not, we are going to see another leg higher, or whether we're going to test those February lows again. So I'm really looking at, the SPYs, the Qs, the diamonds, right, on the daily time frame. And the other thing I'm doing is there are a number of setups happening on the weekly, right? So here's the weekly, right? And there's currently a setup. Doesn't mean a trade. Remember, you have to wait for the long enter the signal here. But we are on the verge of another long setup. So whenever you get a huge, and especially when it happens this quickly, a big drop like this and a bounce back, generally your best signals will happen on the weekly. And that's what I'm looking at. So whether it's the Qs, here's another one here. We haven't triggered just yet, but it never flashed an exit here on the Qs and or the diamonds, for example, right? I always follow gold, oil, the dollar, right? That sort of thing. So you can see that gold, not a nice chart to trade on the weekly time frame, right? Let's see if there's, nope, nothing on the daily either. USO, I believe, on the weekly, that's another one I've been following here because it cleared all these recent highs. You can squeeze in the data here to really show you, right? All I did was roll my mouse to squeeze it in, and you can see that all this congestion, now we've cleared those highs, right? So this signal here, I think, is pretty powerful on gold. Excuse me, oil, USO, the oil fund.
All right, Vince, I will let you repeat the offer one last time before we get you out of here.
Okay, so to get to this page, just go to tradingwinds.com/win. 2 packages. On the left, the platinum package, you get the full tactical trader platform with those tools, the seasonality, the earnings, and the Voracity indicator. All those signals, real-time data, the on-demand training, that'll teach you which trade to select versus another. And remember, this works on computers, tablets. You can access it from anywhere with an internet connection. Data fees are all included. This is one price. Day trader package here includes everything you see here, along with an additional live training class, which happens next Thursday, March 1st at 1 p.m. Eastern, which will also be recorded and sent to you after that. And it includes 3 months of a Trading Winds Pro membership that includes the nightly videos, the live market chats twice a week, and the course of the month, each month for the next 3 months. And all those sessions will be recorded and sent to you. And that's all for one price as well. So tradingwinds.com/win. If you have other questions, if you already have a membership with us and are wondering how that affects your price or have any other questions, by all means, give us a call or send us an email at info@tradingwinds.com. If you have questions specific to the Tactical Trader platform, they just go to tacticaltrader.com and you can get a hold of them from there.
All right, Vince. Well, I'd love to sound like those infomercial presenters that say, you should get a second membership for the trailer. You don't need one. You only need the one membership. So if you do have it, we certainly would be happy to make sure you're not paying twice for that.
Yeah.
Tradingwinds.com/WIN. When you get to that page, if you do have other questions, the Tactical Trader folks at the bottom right, there's a little chat box there. They're always very good in handling your queries there. If you have any questions for us, info@tradingwinds.com. We always love to hear from you. Any comments, concerns, feedback, questions, send it to us at info@tradingwinds.com. Vince, you did good today, man. Really nice.
Thank you. I still have that urge to cough. I hope it goes away soon. But yeah, my apologies for last time. The flu really got me down. But hopefully, you enjoyed today's session. You got something out of it. And again, if there's any questions, by all means, give us a call.
That's our Voracity for Tactical Trader. Today is the 23rd of February 2018. We're really glad you could join us. Thank you so much for making the time. Have a terrific weekend, good trading, and we'll see you soon.
Thanks again, everyone. Take care.